Okay, thank you so much for spending your afternoon with us. You're welcome to another edition of the Dukia Gold Wealth Management Seminar for August 2026. Today, we're going to give you insights and dealings on how to actually diversify your investment portfolio and using gold as a major diversification tools to actually effect that. Been doing this since the beginning of the year, and today's topic is going to lecture us on gold in 2026 and beyond, the strategic case for a distinct and balanced portfolio allocation. Um, as you all know, many of you know, we are going to be making forward-looking statements in the course of this presentation, and we deeply advise you to actually consult your financial advisor before you make an investment decision. Dukia Gold is led by a very vast and varied team of dynamic and well-rounded professionals. We have the chairman, Mr. 25 Me, together with all other directors, which are definitely on this call, who actually give insights on how the gold management framework works and how you can use gold as a tool to better diversify investment portfolio. Um, in context, the major reason why we're actually doing this webinar is because we've seen a decline against fiat currencies and with gold. If you study from the previous 10 years, from August 2026 to August 2016 to August 2026, we've noticed that the Naira has risen from a ratio of 253.5 Naira to $1 to roughly about 1,346.9 Naira to US dollar. So in essence, using those calculations, we've seen that the Naira has definitely grown over 5.3 times weaker. And using gold as an investment asset class within that same period, we've seen that gold has actually done 19.7 times higher just from looking at those two frameworks. So this is the bedrock that we're actually going to be pushing forward this presentation, seeing how fiat currencies actually measure against gold as an investment asset and why you shouldn't put too much trust and too much effort in trusting fiat currencies. We are going to be doing a lot of aims and objectives of this presentation, showing you the strategic case for gold. We're going to talk about gold as investment grade asset class. We are going to talk about why investors need gold in a modern portfolio. You as an investor, why do you need to diversify with gold? And we are going to talk about the major movers and shapers supporting gold's future value, how economic uncertainty, the central bank accumulation, and the laws of economics, mostly demand and supply, actually play a very good role in gold as an investment asset. Most importantly, we are going to talk about gold allocation strategy and how you can build a balanced investment approach using gold as a investment asset class. Lastly, we're going to now talk about how you can find the right allocation and how you can position with gold for the next economic cycle. To give us further context into exactly what we are doing, I'm going to invite the Chief Operating Officer, Mr. Paul Beasley, to actually take us through some insights concerning the international markets and how gold actually plays a vital role. Sir, you have the floor.
Thanks, Emmanuel, and good afternoon, everybody. This is very much a subject very close to my heart, as I've now sort of reached those years in my life where it's important to have a balanced portfolio, and I do hold precious metals in my portfolio just as a matter of interest, and it's worked very well for me. But just going back to what's been happening in the markets over this last month, which is really what I'm going to talk about. I mean, we've seen one of the biggest monthly moves upwards in the price of gold, around 15 to 16%, just in 1 month, which is a very big move. Then we're also from a low base of around 4,040, we're now trading at about 4,580, say. A big move up like that, you're generally going to see a little bit of pullback, which we have seen over the last few days. And I would always keep my eye as a long-term investor on things like on a technical basis, the 200-day moving average, which is currently sitting just above the spot level. So in the short term, as I say, there's gonna be I think a small pullback, but I think the other important thing to note from that low base of 4,040 was this was exactly where the Chinese central bank and other central banks have come in to take more physical material. And physical material is the important thing. I think nowadays we're seeing a lot more interest in physical, i.e., bars and coins, as against things like ETFs. So people like the idea that there is specific metal held for them in vaults somewhere in the world. And I would, from a personal perspective, again, tend to think that that's probably a good idea to have metal stored for you, where, if need be, physical access can be made. So we've seen a good rise. We've seen a floor really under the market, put in place by the intervention from China. But the other things that we're seeing, I mean, this happened really last month rather than this month. We've seen currency intervention with the dollar and yen. But again, this month we've seen bond intervention. Now this hasn't happened. This hasn't happened for a while, but I think there's quite a lot of pain going on with government debt at the moment, and we have to think, okay, what are these governments going to do to try to reduce the amount of interest that they're paying on their debt. So the intervention has come along, certainly, but I think the other way that the other area that we see when this sort of thing happens, it tends to be currency debasement, effectively. Yes, making your debt cheaper to service. So I think that's an important area to consider as well, where we're talking about currency debasement, and gold has always remained a long-term hedge against that particular situation. So we're still seeing de-dollarization. And this area sort of comes back down to holding gold in a physical sense, is that it remains a non-sanctionable monetary asset, which is one of the reasons why central banks have been accumulating over the last few years, particularly since 2022. So those are my thoughts really on what's been happening, what we're seeing in terms of the interventions in the gold market when we see drops. So we're seeing dip buying from very large institutions, such as the PBOC. So my overall view is that and this has generally been my view, is that I would take my hints from the world's central banks and be ready to buy any dips. So that's it for me this month. Thank you all for listening, and I now look forward to hearing the rest of the presentation from Emmanuel and the team. Thank you all.
Thank you very much, sir, for that opening address. I will definitely invite the managing director to give us a welcome address.
Good afternoon, everyone. It's my pleasure to welcome you to this August session. We're happy that you're able to join, and we thank you for your continued interest and patronage. Today, and I must say thank you to Emmanuel and Paul for the opening remarks about what this session will give. So I will only say that today promises to be very interesting for us all, and we would be learning basically about the market realities. We know that there's been various shifts in the market, and inflation has continued to be a constant in the scheme of things. And what we will then be telling you is how we can all protect ourselves, protect our investments in a smart way. We will give you guidance on that. And why do we need to have the need to have a balanced portfolio, and how gold continues to be a very good part of a balanced portfolio. So I enjoin you all to listen attentively and enjoy the session. And at this point, I would say that questions will be taken at the end of all the presentation by Emmanuel and the talk by the remarks by the chairman, and then we'll take all the questions, and you will do that by just typing in your questions in the chat box, and we will do well to respond to them. Thank you everyone for joining, and enjoy the session. Thank you.
Thank you very much, Ma, for those opening remarks. And we kickstart as soon as possible. Section 1 is talking about gold as a global investment grade asset class. So what actually are the characteristics that set gold apart from every other asset class? So one of the most important things to note about gold is that investors actually use it to diversify a portfolio. When you are creating an investment portfolio, most people think of stocks, think of bonds, think of real estate. But one of the credible instances for gold are these 5 basic characteristics. Number 1, it has intrinsic value and monetary supply. As we've said it over the course of our presentations, the value of gold is intrinsic. With or without global market commodities exchange, the value of gold has always been intrinsically valuable. The second is actually scarcity and finite supply. We are going to talk about the laws of demand and supply and how it affects the case of gold. The third is global liquidity and market depth. The liquidity of gold is definitely instant. The fourth is institutional acceptance. Has it been used all over the world that if you know that you have 1 kilogram of gold in Nigeria, it's still the same 1 kilogram of gold you have anywhere across the world, from the United States to China to Switzerland, even down to Europe. The third is the portfolio diversification and risk management benefits, which we'll actually discuss further in this presentation. First is gold as the original global money. For over 5,000 years, gold has served as a medium of exchange, a store of value, and a symbol of financial credibility. One thing you notice that when you purchase bonds by the federal government, even though the federal government has its federal government bonds, a bond is necessarily a debt and a promise by a government to pay back. So the value of that bond is determined by the value of the government and the intrinsic role it has to play in paying back that actual debt. For a corporate bond is the role of a company in paying back the debt. For a bank deposit is by an institution. And gold is only the one that has no counterparty risks. Gold doesn't need a validation by a government or an institution or a company or a central bank to determine its own validity. And this is why most sovereign wealth funds and institutional investors have continued to hold gold as part of their asset classes. One thing you should know, as I've mentioned in the previous slide, is gold is a monetary asset beyond currency systems. Other fiat currencies will experience various forms of inflation, devaluation, sovereign debt pressure, and loss of international confidence. So these are the characteristics of holding fiat currencies. Either your currency gets hit by inflation or it definitely devalued, or the rising debt by the government in taking more actual loans can actually hit the stability and the value and the currency of your choice. But all these risks are not particular to investment-grade gold. No matter how much a government or an institution takes a huge amount of debt, it doesn't affect gold's intrinsic value ecosystem. The third is gold is a finite natural asset. From the World Gold Council, we know that global mine production has grown by less than 1% in a year. So the supply of investment-grade gold, both to banks, both to jewelry owners, both to technological companies, and even both to you and I as investors, has grown by less than 1%. But the varying and increased demand of gold is definitely cannot actually meet up with a structural supply. And you should know that when the demand exceeds the supply of a commodity, its price is definitely going to go up. And this is one of the baseline reasons why gold has definitely been demanded and actually used by sovereign wealth funds and investors to actually hedge their portfolio. And in 2025, we saw that with the US central bank reserves, how gold overtook the US dollar as a share of central bank reserves. Across the years, it's been progressing, but in 2025, we've seen a huge deviation, how most central banks across the world would rather hold their reserves in gold rather than in the US dollar. The fourth is actually the liquidity and market acceptance. The average daily trading volume hit around $361 billion in 2025, placing gold alongside US treasuries and currency pairs. For us, liquidity means the ability to convert your gold to cash easily with minimal friction. And this has been done using the LBMA spot price. With the gram of gold in your hand or the kilogram of gold in your hand, you can definitely, for the comfort of your homes, check its price with reference to the LBMA spot price, and you can know how much you gain if you actually sell that gold, that investment grade gold, or buy it. So its liquidity is a statement to its fact that it can be swapped and traded across board without any instances. Even though we are speaking to you from Nigeria, if you go to the Arab countries, most especially United Arab Emirates or Dubai, you can even see people actually pay for things using a gold card in quotes. So you can actually go to a supermarket and you want to buy an item, and if you have a reserve amount of gold in your wallet, you can pay for that item immediately with gold, and the item gets delivered to you. And this is one of the reasons where the liquidity plays a major role in it being traded across board all around the world. The fifth is the central bank as the ultimate institutional investors. In 2026, the World Gold Council did a press release, and they were asking about, how do reserve managers, these are people who dictate the affairs of institutional funds, how do they expect global gold rising to actually inflate? And most of them, 89% of actual them, expressed confidence that most institutional investors, most central banks, most hedge funds will continue to add gold to their own reserves, far above the US dollar. And mind you, this was the highest confidence survey throughout the 8-year history. You should know that in 2025, from my previous slide, gold exceeded the US dollar as a central point of reserves. But in 2026, reserve managers, 89% of them, are advocating that they will definitely continue to increase their gold holdings as opposed to buying fiat currencies, as opposed to buying shares, as opposed to buying bonds or real estate, as opposed to buying other asset classes. They will definitely begin to increase their value for gold. Next, we are going to talk about why investors need gold in a modern portfolio. For you as an investor, why should you even care about including gold in your portfolio? I like to make this statement that gold is better understood like a fire extinguisher. If you know the federal road safety in Nigeria, you are actually mandated to carry a fire extinguisher in your car. And most of the time, while you are buying a fire extinguisher in your car, you are not expecting the car to get burnt as you drive along the way. But what you're anticipating are the damage the car will get if the fire extinguisher was not there is actually going to be way less. So it's actually now mandated to actually carry a fire extinguisher. And that's the same thing for gold. We are not discrediting other asset classes. They are definitely good and beneficial, but the financial uncertainty that we face today can actually wipe out your whole asset class if it's not properly hedged with gold. And that's why you as an investor, that's the primary reason you as an investor needs to include gold in your modern portfolio. In a survey carried out with the US Money Reserve, they were allocating the best asset classes model for gold, equities, bonds, and stocks. And you should notice that from 2000 to 2025, the best portfolio diversification will be a mix of 55% of US equities and 45% of gold. This was going to give you the best value for your investment portfolio, as opposed to even buying bonds, as opposed to buying stocks, as opposed to buying non-US equities. In 2025, the US Money Reserve actually advocated that 45% gold with 55% US equities will actually give you the best portfolio diversification for your investment portfolio. But clearly, this has to be noted with your own financial advisor. But the point is trying to make is that for a well-constructed investment portfolio, you need to capitalize on the growth of your capital. You need to capitalize on the preservation of your purchasing power. And gold is actually a tool that can make you give all those benefits to your portfolio. In essence, gold provides a strategic portfolio diversification tool. We know of equities, bonds, real estate, and cash look diversified by category. But in a crisis like the financial crisis of 2008 or COVID-19, in any crisis at all, they would definitely fall down the drain. Rising interest rates can hit bond values. The CBN can decide to lower its interest rates, making you not get far better value from your bonds. An economic downturn can weaken your corporate earnings in your stocks and shares. If the economy swings one way, the way it swings during the early part of the year, the value of your shares cannot actually give you the same return as it was actually giving you before. And we know that inflation and devaluation can actually decline the role of your fiat currencies. But all these economic downturns is not going to be affected with gold. And that's why gold provides a strategic portfolio diversification tool for you and your family. I mentioned this during the beginning of the presentation, which was reiterated by the Chief Operating Officer. 100 million naira today will still be 100 million naira in 5 years. But the value that 100 million naira can purchase between those times is definitely going to differ. And we know that from 2016, August 2016 to August 2026, the naira rate has gone 5.3 times weaker in its actual sense. So trusting and investing more in fiat currencies without diversifying into a currency asset or into an asset class that actually gives you a stable portfolio ground is actually very, very risky. And from pension funds to family offices, they actually now include gold as a long-term wealth protection asset, not just a short-term trade. They're not actually monitoring the gold price all around the clock and seeing how best their portfolio is moving down the drain. But they actually include it because of its diversification tool to actually give you the best returns on your asset classes. In essence, from the global financial crisis to COVID-19, we've seen gold was about $2,075 in August 2020, and which was its first break above $2,000. And you should know that August 20 was during the period of the COVID-19. So in economic uncertainties, the price of gold would give you a far better return than all other asset classes. Definitely, gold actually climbed from $700 in 2008, 2009 to $1,900 by 2011, showing you that even during the global financial crisis of 2008 and 2009, gold actually performed better. In essence, in the periods of uncertainty or financial market stress, gold acts as a portfolio stabilizer and reduces your loss and improves resilience for all your asset classes. Clearly, gold supports long-term wealth preservation across generations. If you're keeping 100 million naira in a bank today by saying, okay, by the next 10 years when I'm actually retired, I can give 100 million naira stored up in a bank to your children. That 100 million naira would definitely go 5.3 times weaker in the next 10 years. But if you are keeping investment grade gold as a tool to actually preserve wealth for your family, for your retirement, and for your next generation coming, it's actually a far more durable, a far more portable, and a far more globally recognized wealth diversification tool. So few assets have the intrinsic value that gold actually has. And you as an investor needs to seriously consider including gold as part of your wealth diversification tools. And we've had many other serious investors say about gold. You have JP Morgan say that money is actually gold and nothing else. Even Ray Dalio said, if you don't own gold, you neither know history or economics. We've seen from 2000, from the dawn of the .com era in 2000 down to 2026, where we have faced different shades and sizes of inflation, debt crisis, devaluation, even pandemics. And if you are not owning gold, you have not actually learned from the previous years before you, seeing how fiat currencies can definitely devalue, seeing how the value of your bonds, interest rates may actually wipe them out, seeing how the value of the markets can reduce the amount of allocation you get based on your shares and stocks, seeing how the real estate can be immovable in times of war. And if you're not owning gold as part of your portfolio, you have not really understood how financial crisis can affect the total size of your portfolio independent of your own doing. The third, section 3, we are going to talk about the strategic drivers supporting gold's future value. So even as the past has shown us a good interest into why gold is necessary, why gold has been important for diversifying your portfolio, what are the things currently facing today, things we face today that is going to give us that same confidence, that same stability that gold will actually forever be an investment asset class? Definitely, we are looking at 3 major areas: global economic uncertainty, central bank accumulation, and supply constraints. These are the 3 biggest reasons, not the 3 only reasons, the 3 biggest reasons why definitely, even for the future value of gold, it's still going to give you a far better return on investment. And like other currencies, unlike other currencies or financial instruments, gold has no counterparty risk. So we are definitely going to be assured that even despite the central bank's government policy or a decree from the United States or the valuation or uncertainty in crypto, definitely gold is going to be a globally recognized asset class that has no counterparty risks. So the nature of the uncertainty that we even face today is going to give us far more credence that trusting in gold is definitely the best investment decision you can make. The second is the central bank demand. Central bank demand is one of the most significant supports for gold. If you were with us during the previous webinar, or which is currently live on our YouTube channel, I showed you how the central bank has begun to buy enormous amounts of gold from the People's Bank of China to down across the various Asian continents. You can see the big purchases from central bank from year to date, from Poland, from Kazakhstan to Chile, to Czech Republic, even Jordan, even Singapore. We have seen that these countries have begun to buy institutional amounts of gold, clearly supporting their financial portfolios. So that central bank demand, that de-dollarization, which our Chief Operating Officer talked previously, is going to be one of the major players why the demand for gold will definitely be unstable. We even know that even as we initially thought that People's Bank of China was buying the most of gold, from the track record of all the central banks, we can see that Poland and Uzbekistan is actually beating them in buying the more amount of net purchases of gold throughout the year. Clearly, the third structural support for gold's future value is the mining industry. As I mentioned earlier, the global supply for gold is growing at less than 1% a year. It was 3,672 tons in 2025. But because of the cost of exploration, the nature of the ESG policies, the longer approvals, and equipment manufacturing, or the various intricacies that lie within the mining sector, that gold cannot be delivered at record time. So even if central banks triple their supply within the next couple of months before the end of the year, we cannot guarantee that every central bank will get at gold at its record time. So the supply is going to be way, way lower than its demand, which will eventually make the price of gold across board go and increase in value. In essence, there is 206.3 kilotons of gold above the ground with an estimated value of $29 trillion. But below the ground is 133.1 kilotons with an estimated value of $17.7 trillion. In essence, this supply cannot actually meet up its demands, which is definitely going to be the bedrock of its price increase. Now, there's definitely global bullion markets has further strengthened gold's position as an investment asset class. There is now the development of the LBMA Good Delivery Framework. There are now accredited refineries. There are now professional vaulting services. There are now rules of engagement onto how the gold ecosystem works. So the gold market has now been institutionalized and giving credence into how you participate. Like previously, there was nothing like an LBMA spot price, but now clearly you can have a value of gold in your hand at the comfort of your homes. And Dukia Gold has actually done really that, meaning that you just open your mobile app and you can see immediately the spot market value of gold. So the evolution of the global bullion market has further given far more confidence of gold's position, with these institutional frameworks put in place to regulate how the gold market system works. It's giving you like a confidence, a sense of assurance that even if you buy gold today from the rest of your homes, your gold is actually recognized by international standards and actually sits on the framework that you need to proceed. In essence, let's do like a sub case of 1 million naira test today. As I showed you that previously, that naira has grown 5.3 times weaker from 2016 to 2026. If you invested 1 million naira like in 2016, and without doing any, you just invested it with saving it in your bank account. If you come back in 2026 today, you have 2.3 million naira. So 1 million naira in 2016 will give you 2.3 million naira today. And let's say you did a 15% increase, 15% in gold, while it's 5% in fiat currencies, the naira. It's going to give you 3.8 million naira. Now, you didn't need to worry about vaulting. You didn't need to worry about fees. You didn't need to worry about anything that happened in the world. Even the COVID, you didn't worry about it. Just left the money in naira cash while leaving 15% in gold. You're going to get 3.8 million naira combined. And let's say you decided to put 100% of it in gold. You are not going to worry about, okay, the fall or increase of the gold price, and you put it fully, that 1 million naira in gold, you're going to get 19.7 billion naira, nearly 20 times its initial value from 2016 to today. In essence, what are we saying? That if you left your money in fiat currencies, it's going to definitely add some value to it. But as compared to what? As compared to the economic uncertainty around the world, as compared to inflation, as compared to devaluation, it can never give you the actual returns that you need. But if you begin to diversify a considerable amount in gold, either from 50% if you want, or 100% of it in gold, you are definitely going to get way more returns than you initially started with. And you can see we are comparing like a 10-year period from 2016 to today. I could even bring further instances of even a 5-year period of people who have invested in gold and how much returns they have made during this bear market phase. So for you, as an investor, do not discard all your bonds, shares, and stocks. We are not telling you to do that, but sit down with your financial advisor and begin to allocate a moderate mix of your portfolios into gold. And these are ways to do that. You can either be conservative, you can either be moderate risk aware, you can either be high risk aware, or you can be aggressive inflation hedge portfolio. It depends on your own portfolio allocation framework. But we want you to begin to consider diversifying your portfolio into gold and saving yourself the strength and the risks of the devaluation of your currencies. You need to sit down and actually make the allocation framework that you will better give you far more value of your investments. In essence, who is the firm or the entity doing this presentation? We are Dukia Gold, West Africa's foremost full service bullion merchants, and we operate across the end-to-end mines to market framework, either from exploration, either to refining services, to physical distribution, and secure transport for you as an investor. Responsibly source the raw materials, including gold doré, and refine these materials into investment-grade bars and coin blanks. And we've been featured across a number of major publications, from the Business Day down to the Market Forces Officer, giving you the framework that you need to actually better induce your investments. We recently launched our mobile app, and most of our customers and people using the app have found it convenient and easy from the comfort of their homes to actually get into the gold ecosystems. The government-backed, they are regulatory endorsed, we are fully national first. So we are operating the full service bullion solutions in Nigeria and have been covered internationally. And one of our major strengths is our compliance regulated framework, in that while we do our different sourcing processes, we make sure that we are aligned with international standards like the World Gold Council, the London Bullion Market Association, and the Ministry of Solid Minerals Development, making sure that the gold you purchase from Dukia Gold is actually credible and actually meets your financial needs. There's a real-time pricing on there's a dollar cost averaging framework in which that you can begin to set aside that, okay, at the end of every month, I'm going to buy 1 gram of gold to further diversify my portfolio across board. And they're giving you the framework and the entity for you to do that. So without even from the comfort of your homes, you can have a secure and the most valid link to actually increase your portfolio allocation. So this is our monthly webinars, teaching you fresh market insights and direct assets into what we do at Dukia Gold. And from this presentation, we've shown you that fiat currencies will experience economic downturns. That one is certain. The market conditions can actually affect a major portfolio, but in essence, a portfolio that is diversified with gold will give you the best returns on investment. So we implore you to actually sit down with a financial advisor and begin to take a far more decisive risk towards your investment portfolio, and which is to include gold within 10 to 15% range based on your choice and your investment portfolio needs. Thank you very much. And I'll invite the chairman to give his closing address before we take the questions. Chairman, sir. You have the floor. But thank you so much for staying with us. If you have questions, you can easily just drop them in the chat while we take them as quick as possible. The chat is open for people who want to inquire and ask questions concerning how we moved forward in this presentation. Okay, Hawa Hassan was asking, what is the minimum amount you need to start before investing? Dukia Gold has already made it credible for you to start with an amount
Manuel,
of 5.
please unmute. Okay.
Okay.
So once again, it's a big thank you to Paul for saying about MD. I thank you very, very much for managing programs to take place every year for the last 4 years. I'm also grateful for the many great efforts of every member who make this a success story by doing enough research, and of course coming back nuggets that is essential for the future of all of us who are trying to manage fairly tough football. Like Emmanuel has said, the world is changing and it's changing too rapidly. We've gone through COVID. Government printed a lot of cash, whether it was America, Europe, Nigeria. Because after all, most of us were not going to work. There was no farming. Everything was subsidized. If you print too much money, you usually have too much money chasing too few goods. It basically causes inflation. Unfortunately, what we have had is that we know now 3 things. Because of the number of cash, printed cash, fiat cash, that have been wished into existence, America, Europe, Africa, Nigeria will continue to battle inflation for the next 20, 30 years. Inflation in Nigeria has been moderated, but it's still at 15%. What it means is that if we have 100 naira at the beginning of the year, surely at the end of the year, what 100 naira could buy will be bought in January, beginning of the year when you buy it. But at the end of the year, you need greater than 115 naira to be able to buy it, because that good or that currency would have deflated maybe 25 instead of 100 that it was. So what can you put your money into that would not allow that degradation, depreciation to take place? The only commodity that we think we know is gold. Of course, people will say to you, shares make sense, and I agree. 2 years ago, when we all had banks and stuff, we saw bank shares move down, stay down. Luckily, the correction has been done by central bank. They are more stable now, they're properly capitalized, and suddenly the value of their shares has moved on to 100, 120 something. But you need to look at it in terms of how much did you put to buy that shares 20 years ago. Some bought at 5, some bought at 20, some bought at 40. If you are taking that same money and bought gold instead, what Emmanuel has shown you today is maybe it would have gone up maybe 3 times, but gold has surely gone up 20 times. So if you compare gold as an asset to any other investment or transactionary motive investment portfolio, it's obvious gold has outperformed and should continue to outperform every month. If all central banks have paid attention to gold and they are buying it, trust me, you can't beat the idiot if you also join the central bank in doing what the central bank is. Central bank are made up of some of the smartest people in any country. Even the Basel III, the IMF and the World Bank have agreed that, yes, of many currencies to hold in the world right now, hold 2 of them. old gold or old American dollar. And even today, the battle for the dollar is finally on. America has weaponized the dollar. There's a lot of noise about de-dollarization. Unfortunately, rather than get better, America has weaponized even the SWIFT payment system. And America suddenly has also woken up to weaponize even crude. It's getting worse because the war in Iran and the war in Iraq have compounded the value of crude. The subsidy out of Venezuela can't continue forever. The Strait of Hormuz can't become an issue. And again, the US Treasury finally woke up to what they've always said. They know that gold is important in propping up any economy. And even they said it now finally with their mouth. In order to bring down a government in Iraq, they believe that they need to go after their gold. What it means is that we now know finally that even Almighty America really worries about gold. If they are this worried about gold, I urge each and every one of us to be worried about an investment portfolio that does not have gold in it. Please buy gold. Ensure that your gold is well kept, preferably in physical form, preferably stored in a physical location where you are very certain that you can have access to it. Also ensure that your gold is in a good place where it can be fungibly converted into currency, even if what Dukia Gold is trying to do to provide you the most pleasant experience for acquiring gold, the most pleasant experience for storing your gold, and the most pleasant experience in being able to reconvert your gold back into a currency of your choice. We've done everything, and I'm going to also thank all our shareholders and banks and supporters because while we were creating this strategic business unit called TMR and trying to create a web-based trading platform and the app trading platform, we needed, of course, to be sure that every demand for gold is sustainable, is available, and can be delivered without unnecessary hassle. Again, we've told you we found enough ounces of gold now to go to production. We are going ahead with our production, and we'll continue to invite everyone now either to buy more physical gold or join us in streaming contract arrangement, which allows you to pre-purchase the gold that will come out of the ground. Of course, that carries a bit of a discount because it's a forward pricing product. And hopefully this change the way in which you are able to access physical gold. It's like you going to a bakery and saying, I want to eat bread on Sunday, but let me buy the bread now on Monday. Because buy it hopefully at a better price than the person who walks into you and says, do you have bread? Yes, they have bread, but that bread has been baked for Mama Tawa and Mama Daniel. Therefore, if you want your own, you're going to pay spot. Buy gold at us, from us now at a forward price. I think that's finally available. Of course, not yet on the portal. That has to be done by what they call bespoke private arrangement. But for those who want to be sure that the gold they have can instantly be traded and dealt with, sell physical gold. We sell also allocated gold. Please go ahead and have it. We've restrained ourselves from launching fully Dukia Gold Card, again, because the SEC CBN were a bit delayed in the rules for some of the things that we're doing. But I'm grateful to God that SEC has finally issued some of the draft regulation, and also the CBN and the SEC now have a joint working committee to be able to make these things work. So we would be able to accelerate our launch program now that our policy and regulatory regime is a lot clearer. But what makes us happier is that we would then not be selling imported gold, we'd actually be selling gold that we are certain of the provenance of everything that is there. We must also let you know, please, as you try to buy gold all over the world, be aware that the US government has finally issued a determination order regarding gold. And therefore, the gold that should be in your portfolio must be an LBMA provenance known gold. And we can promise you, Dukia Gold, that the gold that you are going to buy will come from our mine, will come from our processed at the highest level of purity with known provenance and stored in rings in Switzerland. This would ensure that in the unlikely event that you buy gold and there were to be the need to check where your gold came from by the US Treasury, they would be happy to know that you are not one of those who have bought or traded any gold that is basically on the sanctions of the US Treasury. So apart from worrying about AML, AYC, excuse me, we need to continue to worry about the effect of pronouncements by the US on the world trade, especially regarding currencies. Perhaps the most important thing I want to say at this meeting is we are now in a year for reckoning for the government that is currently occupying Abuja, President Bola Ahmed Tinubu. And it's a year where you're going to go in for campaign and a lot of things will be together. They're not supposed to be political, but it's very obvious that there are arguments being made about reversal of subsidy of petrol. There would be further arguments being made about acquiring shares of treasuries, anything into whatever it is that anybody's doing now. Look and hear the noise, but please protect yourself, protect your economy, protect your investment portfolio. Buy gold. Because when it's all said and done, and the winner truly emerges, you have only one thing to thank God for. One, that you survived another election season. And two, that you are better prepared to face the future with the winner only because your investment portfolio is balanced and makes sense. Please buy gold, hold gold. And lastly, buy it now, because we begged everyone in March, April, May, please buy gold. Gold technically came to its lowest around that time in terms of opportunity. It's on its way back up. And if you read what is happening in Japan and the fact that America finally had to go in to subsidize the Japanese economy, or at least to intervene in the Japanese so-called financial system, it's obvious that America cannot fight every war, physical war, economic war, political war, everything. They are stretched. Because they are stretched, the American dollar will need to show a bit of the wound that it is basically inflicting on itself. When that happens, the value of gold never changes. 1 ounce is 1 ounce. The only thing that will change is how many dollars will buy the gold. How many dollars would you need to buy 1 ounce of gold? We think that more American dollars would need to be found to buy 1 ounce going forward. And it's been predicted it will get as high as 6,000, some predict 10,000, some $30,000. It doesn't matter to us. What matters is that at least nobody has said it will crash to zero. and we all know it won't touch to zero. Therefore, if you enter now and you hold it long enough, you will be protecting yourself dollar-wise. But more important, it's an election season, like I said, in Nigeria, and therefore the word uncertainty will come into play. Please buy gold, hold gold, and pray that truly we all meet again when the election is over, and we can all look back and say, close call, but thank God I had 25% of my stable asset in gold, and see what the Lord has done. God bless you very, very much for this. I'll yield the microphone. Thank you once again, Emmanuel. Thank you, Paul, and thank you, and thank you all who helped in shaping this up. Most great. Have a nice afternoon.
Thank you very much, sir. As you noticed, I've answered most of the questions in the chat.
It's nice
Okay,
for you to verbalize it quickly, Emmanuel.
Okay,
just summarize.
Okay, concerning the investing in gold. One asked about the Dukia Gold app. We already have a mobile app where you can actually make an investment. So if we have a website and we have a mobile app, but that mobile app is mostly used because of its convenience. So you can just download the mobile app from Apple App Store. I'll include a link to it in the chat so you can easily download it and make your investment decision. Okay. Thank you, man. So I'll still need to bring you back up. Mrs. Tope Omage was asking she just needs far more clarification on the returns on investments.
Okay, so we did a tiny experiment once, and we found out that anyone that invested $1 in the last 5 years in gold actually made a return of 793%. And you can do it. It's a very simple question on the internet today. If I put $1 or $1 equivalent of Naira, if I used it to buy gold, and I have that gold kept over the last 5 years, what is the rate of return that $1? It's about 793%. Most people will argue that that's not true, but again, it's a very simplistic conversion, and three things happen. In the last 5 years, the Naira moved from around 300, 400 to about 1,600, 1,800. Thank God for a very efficient government. They've been able to bring it down back to 1,003. Prayer is that it will go to 1,000 and stay. The second thing that then happened was COVID basically printed a lot of money, whether it was dollar or Naira. And that, again, caused inflation. And inflation went 26%, 30% in Nigeria. In actual fact, the inflation in Nigeria at the point in time, unofficially was around 40%. But again, we have a very responsible government, and we must thank them. They brought it back from circa 30, 40 to about 15.7, ranging to 17%, depending on which matrix you're using. Yes, they've rebased the economy also, that allows more things to come into that basket, where inflation can be better managed. But inflation is still elevated at 15%, because what it says is that 100 Naira at the beginning of the year will be 85 Naira at the end of the year. And therefore, the way to look at gold is what Paul told you, abolition. We will never be able to mine enough gold to satisfy demand. So there is going to be a permanent demand for gold. Luckily also, there will be a permanent supply for gold. Because if you buy and you keep, one day you may have what they call need to have cash, you will sell. So there is a secondary market for gold as well as a primary market for gold. But can the two markets oversupply gold? The answer is absolutely no. Because it was stated in March, somewhere in April, and again in February this year, Turkey sold or swapped most of his gold from his treasury. It was an oversupply, certainly. What did he do? It's been quietly absorbed. All that Turkish gold that was supplied by a whole country, tons of it, has been bought, quietly redistributed into smart people's treasury or vault, and they are the better for it today. Because now, gradually, because all that excess liquidity quote has been absorbed, gold is going back to where it's supposed to go back to $6,000. That's my own. Now, Paul also told you, just in a month, the price of gold has gone up by almost $150 or thereabout. No other opportunity exists like that, especially when it's the safest of all safe investments. And I say it very loosely. The treasury used to be one of the best to do because it was government backed. But everybody now knows that the treasury that you back is a true faith backing because it's the fiat currency. If a head of government who is not technically savvy in economics, if a head of government who is not technically savvy comes into play, trust you, trust me, the value of that currency, the value of the treasury, the value of any instrument held or presented by that entity can basically go away. There are examples of people who would default in corporate bonds, in personal bonds, but there are also examples of government that can default in their own bonds. And what it does is that it creates the famous Brady bond kind of scenario where you have a junk bond. It's still a bond. Please don't join the junk bond scenario. Put your money in gold. You'll be very, very grateful that you did. I hope I've answered your question, Manuel. And thank you again, Mrs. Omagi, for asking that question. Always a pleasure to have your intellectual contributions. Thank you. Emmanuel, is there any other question I need to attend? Okay, for anyone who is not yet opened a Dukia Gold account, I would beg you and urge you to please do so. We are working on our side to get the Securities and Exchange Commission to do quite a few things with us. One of that is the gold-backed tokenization program, and by grace of God, we should get that one sorted out very soon. The rules, the laws, the ground norm, everything is being sorted out now as we speak. SEC has made one or two pronouncements. The federal government has set up a committee for what they call tokenized assets, virtual assets. In our own case, it's not a virtual asset. It's actually a physical asset being pre-purchased technically by you, but it's tokenized. Therefore, you can basically trade it in token form. Again, like I said to you, the Dukia card is ready. It's been tested. Only kept it in abeyance from a public launch because we need to be sure that if you make a demand, the supply does not translate to us filling a form M to buy gold from somebody. It's actually demand from the mine you own, and that mine will produce to meet your demand. Therefore, for it to make it, it's like saying you are going to use Naira to buy gold, and you can then convert that gold into Riyal or dollar or Naira or any other currency that you like without going through a foreign exchange intermediation process. It says first buy Naira to dollar, dollar, then buy gold. No, you can use your Naira directly to gold, and then you can take that gold out in any other form or format or currency that you like. I think the central banks, we've spoken about them. What's the added benefit of saving money in gold rather than dollars? It's several. It's a fight against inflation. It's a fight against every other thing that you may need to worry yourself about. Again, it's also an insurance risk in a country or situation where there are many vagaries and uncertainty. Election period, yes, as certain as we know who the winner would be, sometimes you also have to be aware, of the unintended consequences of any action that anybody takes. So if talked about return on investment. We talked about everything. I would yield the microphone to the managing director and Emmanuel. Thank you. Paul, if you also have anything to add or take away, let me know. Thank you.
Thank you. Thank you very much. Mr. Paul Beasley, you have the floor, please. You have the
All I was going to say, Emmanuel, is I've got nothing further to add on this particular subject. I wish everybody a good month and look forward to speaking again at the end of September.
Okay, thank you very much, sir. We've addressed like close to 95% of all the questions here, but if you need us to further elaborate, you can just quickly send us an email and we'll definitely get back to you. They are very personalized questions I can't actually open, so I had to be replying to individuals. But if you need far more extensive conversation, please don't hesitate to send us an email or check our frequently asked questions, as we've really resolved to answer most of the questions in that regard. So the email and the FAQ will be in the chat, so you can just easily reference or send us information if you have further explanations. I will invite the managing director to give us a closing remark before we close the presentation.
Sorry, Emmanuel, can you unmute Chairman?
Oh, just give me a second.
Yeah. Okay. It's important that I thank everyone once again before the end of the book. I have two major announcements. Someone has asked a very simple question. Do we keep gold on ourselves? The answer is no, we don't. We put all our gold in the Brinks vault. And the reason is very, very simple. We need to be sure that we are insured. And we need to be sure that if we also trust us, that we also ensure our use correct. Keeping gold in a vault anywhere only means that you are going to be paying unnecessary costs and carrying unnecessary issues. What we have said, what we will need to repeat is this. In the unlikely event that you think you want to have access to your gold, you are free to do so in the comfort of your home. And the way it works is simple. Buy the gold and go to the portal, tested it now, it works. Fill out the fact that you want your gold delivered, and that gold delivery process will take place the same way Mr. Biggs or Mr. KFC or Uber Eats deliver your food to your house. And basically, you can sign for it and keep your gold yourself. It takes us away from the risk of carrying gold and having unnecessary attention, or that, yes, gold is stored there, go there. No. We will also encourage you, because at the end of the day, when the gold gets to your house and you have the physical possession of the liquidity, like I myself have gotten carried away carrying one bar of gold. And indeed, there was a particular occasion I wish I could share the photograph. I actually carried what you refer to as one of the heaviest coins of gold in the world. It's a maple leaf in Canada. Carrying $14 million in your hand and showing it, it's a good feel. Better than a big case, I can tell you. It's also a bit better than carrying a pillowcase. That's about carrying even your books. But it also leaves you humble, because at $14 million of gold in your hand that day, where could I walk up to? Who could I go and show? Even the photograph that I took, I can't show it to the world that I've carried it, because in itself, what it does is that everybody says to you, if you have $14 million worth of gold, you come knocking and asking for $1 million out of it. So my challenge is, please buy gold, store it well, the good thing about the experiment we have done with the app and the web-based trading platform or storage platform is that it has also allowed you that when you want to sell, let's say you have bought 1 ounce of gold, you've taken it to your house, you kept it in your house. Then after 1 year, you want to sell, you bring it. Yes, truly, the value of gold would have gone up, but the amount of tests that you will need to do and the amount of documentation you will need to prove that that gold actually came to you legitimately is not going to be worth your while, in my opinion. It's also not going to be worth your while eventually because it's no longer first hand, it's actually a second-hand gold, and therefore you will get a discounted value. You will then start to complain and make a lot of noise about things. Look, that's what you're. Of course, some people bought jewelry and want to trade their jewelry. We used to try to buy jewelry in the past, but that doesn't make sense also for us for 2 fairly difficult reasons. Provenance demands that you must have proof of purchase of that jewelry. Some have come to say, oh, it was given to me by my great-grandmother. Fantastic. Show us the probate registry that says that you are the inheritor of it. 99% of the people don't have it. And because they don't, we very intent on being AML compliant. We're very intent on being provenance compliant. And therefore, we have had to de-emphasize trying to source gold or supply gold just anyhow. We're very, very careful about what we're doing. And therefore, we will urge all of us who join our ecosystem, even if it's just to buy 5,000 Naira worth of gold, buy 5,000 Naira worth of gold every day, every month. You'll be happy you did. Store it over 365 days, store it over 720 days, store it even for longer. You'll be surprised how 5,000 Naira, which you spend every day in buying gold, suddenly compounds in your hand. And if you can make it a habit of 100,000 every month, like an Alajo would say, and you're not trying to contribute a job that somebody is coming to carry, it's your own. After 6 months, if you feel like touching it, you can always sell down the gold and touch the cash. And if you are smart again, you buy it again. But I would urge you, put at least 100,000 Naira away from any portfolio that is carrying a 1 million Naira income or thereabout disposable income every month. Put at least 100,000 Naira away. If you do business that allows you to have a 10% profit suddenly, find at least 10 to 15% of that amount also. Buy gold. Because if you do, you will look back and say, yes, what did I use this money for? And it's always very important for those of us who trade in waves to actually say, oh, I used this profit to build a house, or I used it to buy a car. You'll be surprised that if you use the same amount of money you used to buy a house or 100 million or 200 million car, if you use that amount to buy gold and you look back in 5 years' time, when that car is finally going to the mechanic and it's going to spend you more money, you'll be very, very surprised that if you were to look at that same amount of money that you put in gold, you'll be able to buy a brand new car on that same day and you will not have any headache called the mechanic. Or even if you bought a house, in 5 years, when the house suddenly says you need a plumber, you need a painter, you need a this, you need a that, you'll compare the value of the house with the value of the gold, and you'll be surprised that the gold will still be better, and they will not need to come and spend money on plumbing or spend money on gardening or painting of the house. I think the essence of today's conversation with Emmanuel and the essence of today's conversation with Dukia Gold is simple. Please spend time, look at your portfolio. If you buy beer every day, save the cash that you use in buying beer, test it, try it, put 5,000 Naira away every day for the next 365 days. Look at your portfolio at the end of 365 days, and I'm happy you'll be able to say, thank God that you did it. If you have cash that comes your way every month, set up a standing order, buy gold every month. It doesn't matter what the price of gold is. It will average out or overage out, and you'll be better off looking back in 2-3 years to say, oh, how smart have I been? And if you have a portfolio advisor, please sit with them, look at your portfolio and say, oh, I'm worth $200 million, or I'm worth 200 million Naira. How much of it is in equity? Everything is in equity. No, diversify at least 10, 20% of it into gold. Put 40 million, put 20 million, put 10 million. You'll be happy when you look back in a year or 2 or 3 years' time and you compare the stocks versus the gold and you see the gold has done a lot better. The only other thing I need to do is do a public announcement. That public announcement is supposed to be a private announcement, and that's why I'm able to make it at an invitation like this. We are making good progress with Ariola Minerals resource development at the company. And again, I want to thank those who have capacitated us in the recent past. We would be doing another private placement of the equity of that company on a invitation only. If you are interested in acquiring a bit of the equity which is being sold at this time, please send a small WhatsApp message or an email to Dukia Gold. I will ask that the Dukia Gold email address for inquiries sent out so that it's there, and you are reached through this channel or the channel that reached you, send a little message back. The most grateful to work with you in ensuring that you become what they call a private shareholder. Dangote just did one for his refinery. The big boys got it. But we think that, yes, all of us who have always shown interest should have an opportunity to enjoy out of a risk asset. We are also happy to report that we are becoming NI 43101 compliant. We've completed a bit of work on a COMEX standard. And again, because that is happening to us, we believe eventually that we would be able eventually to get not just a local listing, but also to be able to attract an international listing for a very major asset that we have found on our hands. We also need to continue to thank the host community for being extremely civil and accommodating with us. We need to continue to thank the governor of Ondo State, His Excellency Ayedatiwa, for being one of the best host governors in terms of economic investments. Oh God, we need to thank the Honorable Minister for Solid Minerals, Dr. Dialaki, for being the best minister ever in the annals of history of solid minerals development. And we thank also the Minister of Trade and Industry. And of course, we also thank the very many ambassadors around the world that are championing cause and case of Dukia Gold. It will probably be one of the most important investments in Nigeria, hopefully within the next 2, 3, 5 years. And therefore, I would invite you to be part of history right now, and God be with us to begin. Once again, thank you for allowing me to make this announcement. Thank you also for being part of the family. Thank you also for your rapt attention. Over to you. Thank you. And
thank you, Chairman. And if there are no more questions, I think it would be a good place to stop. So I'd like to say thank you to everyone for attending and for your contributions. And as Chairman Paul and Emmanuel have suggested, we encourage you to consider investing in gold, and in fact, take steps to invest in gold. And if you're already in, we encourage you to do more, and you won't regret it. Thank you, everyone. Emmanuel, please put the website in the chat box for the people who have asked, and then you can always contact us at any point in time. Our customer care numbers are listed on our website also, and you can reach any one of us. Thank you, everyone, for joining. Thank you, Chairman Emmanuel and Paul, for giving us new knowledge today. And we look forward to more next month. So thank you once again, and enjoy the rest of your afternoon. God bless and keep us all. Thank you. Bye.
Thank you very, very much, Ma. So the website links are on the screen, our contact information is on the screen, and we hope to see you on the last Thursday of September, being September 24th. So we love to see you again. So thank you for spending an ample amount of time with us, and we hope that you will begin to include gold as part of your investment portfolio. Bye for now. Thank you very much.
Thank you. Thank you, everyone.